Hey folks, and welcome to the Pipnotic Symposium for the 26th of February 2021. Today we're going to talk a little bit about the asset strength histogram and the asset strength reversion algo. I've been really busy this week analyzing data and developing both pieces of software, and I just want to show you some of the stuff that I've been up to. One of the most important things I think in trading is getting some kind of confirmation that what you're about to do or the bias that you have about a market has some kind of validity. And if you look at price, this confirmation can be in the form of candlestick patterns or something else, or support and resistance, or supply and demand. But if you're not looking at candlestick patterns, you have to be able to quantify momentum in the market, and you have to be able to quantify a stop or a pause or a slowing down in this momentum. Okay, and this is essentially what the histogram and the asset strength reversion algo is, or the new versions at least, will want to see before entering trades. And you can see here that if you consider what's going on down here, you can see that we have the histogram, which is swinging around the axis pretty actively as price goes up and price goes down. We're getting quite a few buy and sell signals, as you can see. Price pokes up into the positive variant. Let's sell, let's buy, let's sell, let's buy, let's sell, let's sell again, let's buy, let's sell, let's buy. And so you're thinking like, wow, there are loads and loads of signals to buy and sell, but some of them would have got us in a little bit early. Okay, and if you have a closer look at this, for example, this was a really nice place to sell. This was a really nice place to buy. But notice that if we would have bought when price entered the area, it would have been sold. We would have sold just here. Okay, that was a lucky punch. That was a good one. So let's not use that. Let's use this one here, where price would have gotten us into the trade at about just here. Okay, so that's the entry point. The price moves against you quite a lot, and it almost only goes to break even, barely beyond break even, before it turns around and probably stops us out. And so what I've built into the alarms in the histogram and also the trade activation is confirmation. Okay, and I'm not looking at candlestick patterns because these can vary from broker to broker. I'm looking at something that's actually much more profound, and that is the underlying data, of which we have lots of. Okay, so data is good, and we are trying, or rather I've managed to quantify a way to see when momentum is slowing down, where a given move is slowing down, and we can expect some kind of a retracement, either price moving higher or moving lower. So if we were going to got pulled into the trade here just by buying and selling at the histogram moving beyond the signal lines, we would have got in here. But confirmation would have enabled us to get into the trade right here on the open of this green candle here. And so if you consider that for a second, the first one would have been here, which is a pretty bad place to get in, not very optimal. Then the other one is down here, which is 50 pips lower. So that's a much better price. The price for that for this pair is much cheaper down here, and this enables us to put our entry here, our stop down here, and our target is much closer, rather much more reachable than a target if we would have got in here. Okay, so that's one of the main features that I've introduced. Another one is the option to enable, let me show you what it looks like in the configuration. Where are we here? So there's a setting here called enable counter trend, and this is set to true. So what does counter trend mean? Well, if you're looking at the mean line, which is essentially telling us where we have trends or histogram trends, when it's negative, as you can see here, you would expect that price would move lower, continue to move lower. And when it entered negative territory, it did so around here, somewhere around here, and it stayed negative. Let's just mark that off. So we managed to poke in around there, and we managed to move out of it again around here. So we got in here, and it crossed back above again just here. So I mean, not that big of a price difference, but in the meantime, price went up, it went down, it went up, it went down, and it went up. So there's a lot of sideways price movement, despite the fact that we are negative. Okay, so we would expect this to move lower. And this is because if you consider the price of anything, you have kind of, I suppose, a mean, some kind of an average, or you have, this can be upward sloping or it can be downward sloping. But during that trend, price is normally moving in cycles. We have a positive cycle, we're moving negative, we move positive, we move negative. And these trends can last for shorter periods, but they can also move and continue for longer periods. So price can be positive and get even more positive and more positive, and then negative a little bit, and then positive again, and then negative. And so it's really difficult to use the histogram alone to see where we are. But what I've found out is that when we have a line, let's just use this line, if we have this and we are trying to see when we have a real completion of a bearish cycle and a real completion of a bullish cycle, we have to use data that is much more profound than the histogram, because we're getting mini cycles all the time. We have kind of a positive cycle, we have end of a negative cycle, end of the positive cycle, end of the negative cycle. So what I've done, I've built it such that with that new setting that I just showed you in the CSR, that when we are looking to buy in its current configuration where the counter trend is enabled, it waits for the average of the histogram to be negative. Okay, and so once this happens, and this happens from around here, so now it's looking for buy signals. We don't have buy signals, we have a buy signal here, but we're waiting for confirmation, which gets us in at the trade right here. So we get in around here, not a very good line, but around here at the bottom, which is beautiful. That's a beautiful entry. We have a negative mean, which means that we are reaching kind of a cumulative end of the bear cycle, and we're waiting for confirmation. So this is a beautiful entry. Okay, we got into this one here, and this is the same thing where we got into this bear cycle here, but price went up and then it went down. Okay, so price went negative here, and we probably would have got in. The robot was switched on yesterday at about this time, just here. So it didn't really get in. Didn't get into this trade, but what it would have done is that it would have gotten into the trade right here. This is when the negative, sorry, this is when, God, these lines are not easy to draw. This is when the mean turned negative. So we would have actually gotten the line, we would have got in around here. But yesterday when I switched it on, we had price moving negative. We did not reach the signal line. Price moved negative. We went positive a little bit. We went negative, and when that happens, then it kind of switches it on and it makes it ready to trade. And then when we start to see the confirmation in the histogram, which is about right here, actually you can see the price right there, that's when it got in. So it got in right here. Okay, we have a negative mean, and even though we have a negative mean, notice that price is going higher, and that's because, as I drew earlier, we have these cycles like this. Okay, and we want the slower cycle, the more profound cycle, which is the average of the histogram. We want that to reach negative territory before we consider the buy. I hope that makes sense. But you can also change that if you're using more data. For example, let's say instead of using 200 periods of data, you're using, you're using 500. Well, then maybe the mean is more useful because you're using more data. So let's just have a look at what that would look like. I'll remove these and let that up. Oh, sorry, we want to use this one here so we can actually see it. Okay, so let's use 500. See what it looks like. Give it 10 seconds to load. Okay, and now you can see that we have positive, and now it stays positive. And so over the long term, we have positive, And you can see this because, I mean, from the low here to the high here, when we could see the price started to change, but it didn't get positive until here. And what happens once it reached positive territory? Well, then it was ready to start moving lower again. Okay, so you can't really use that very well, or for a whole lot, unless the trend is really set and really flying in a certain direction. Okay, when this happens, what do? Well, then you're going to take some losses. And so when you take losses, what's the best way to make sure that you don't lose too much money? Well, that is by setting daily loss limits. And loss limits are built into the algo trader in numerous ways. First of all, we have a percentage loss limit, so we're not allowed to lose more than 2% a day, 5% in a week, or 10% in a month. You can change these to whatever you like, but this is what I'm comfortable with. But also, if if a currency pair or an asset is rallying and we take a trade and we get stopped out, well then the algo trader will not trade that asset again today. It'll wait until tomorrow and wait until things have settled a little bit. And this is normally because when intraday volatility is introduced because of data, economic data, um, the introduction of this data causes extreme volatility for a short period of time. Okay, but you don't know how far it's going to go. It could go up just a little bit, and it might go up to the range and turn around, but it might go on for 2 times or 3 times the range of the asset. And so if you take a loss, that means that the algo or you were wrong and it's time to wait. Okay, let's wait and see. And so the algo has programmed into it that it only takes a win and a loss 1 time per asset per day. And that just helps slow things down a little bit. Because essentially, trading is about convincing yourself why not to take a trade. I mean, you can want to take a trade on anything. You could want to trade anything at any time on any time frame. So you want reasons to keep yourself out of that trade, and this is where an objective checklist comes in. So do we have the trend? We have a trend filter. Do we have confirmation? And these are filters they're gonna stop the robot from opening trades, and this is what we need. Okay, good. So we have that. Okay, and I'm going to show you the update in action. And I want you to remember that the results that I've managed to get since yesterday afternoon, so under 24 hours, are not normal. This is not normal performance. I've never seen anything like this, and I'm sure I'll never see anything like it again. I think it's kind of a freak result. I think that the algo was very, very lucky. I think yesterday was maybe a time where price rallied really far high earlier in the week and we reached these extreme highs, and now price was weaning off, and this is why everything was at the extreme levels. So the robot traded a whole lot of different symbols and assets, and they just bled back and refilled the price imbalances that were established during the early part of the week. Okay, so what I'm going to show you is not normal. You can't expect this to happen probably ever again. It did happen, but it's not normal. I think it's really important that you understand that this is not normal behavior. Okay, but when that's said, I also want to say that it did happen. Okay, so this is possible, but I don't think it's possible to the degree that what we're experiencing over the course of the past 20 hours or so. So I'm going to show you quickly some of the trades. So if we look at the trades from yesterday, we opened with a $10,000 Kiwi account yesterday, and currently it closed out 35% profits. I mean, that is completely insane. Risking 0.5% per trade. It's completely nuts. It's completely nuts. And it's given that I have multiple instances of the algo trader running. I have 6 instances running in 6 different configurations. And so some of the trades are going to get in early, and others are going to get in a little bit late, depending on the state of the market. Okay, so this is what it looks like so far. This is close. This is bank profit, $3,500, 35%, and currently we have a floating P&L of 15%, which is again completely bonkers. It's completely bonkers, and it's not normal. I want to emphasize that this is not normal at all, and so you can't expect this to happen. I think that the robot was switched on at a pretty unique time, which is why we're seeing this kind of result. But that said, it is possible because we're seeing it. Okay, and if you guys want to log on to this account and follow along with the experiment, well, you can do so. The login information is in the Discord channel, and I encourage you all to do so. And for everyone who's a user, you'll recognize all the data that you can see in here. This is just telling us a little bit about the configuration. Okay, so you can see this is here we have 4-hour trades, hourly trades. We have a couple of daily trades in there. Okay, and so this is going to allow me to analyze my sample size of about 10,000 trades and enable me to draw some conclusions, and these conclusions will come in the form as a default configuration or parameter set for the algo trader and the histogram, which would be really nice. So I'm expecting to have those before too long. But what I'm going to do is I'm going to take the algo trader, I'm going to update it, and I'm going to release that on Monday so that you guys can start testing it. But I want to remember that this is the algo trader. It's a very high risk algo trader because it can, in the wrong hands, take tons of trades and expose your account to enormous risk. So I encourage you to do this only on demo accounts. Okay, this is really, really important because the likelihood of this happening ever again, is very, very small. I think we were a little bit lucky. So I'm expecting actually next week on Monday to maybe see most of these profits given back, at least during the stage of next week, because it's not normal. Okay, well, I'm going to leave it at that. If you have any questions about the algo trader or the histogram, you can just shoot in the Discord channel or leave them in the video comments as well. And yeah, thanks for watching. And I want to thank everyone in the room for helping out with this. I know that Cameron and Ryan are really helping out with the analysis, and Eric and Andrew from Australia. And this is really cool because it's so much nicer when we have a bunch of eyes, we have a bunch of hands on deck, and everyone is really focused on a mutual goal, and that is to find a beautiful configuration and setup of these algo traders that we can use to essentially earn a little bit of passive income. It's a very exciting project, very exciting project. And I also want to thank the user Wassa in the room. Wassa he's an old institutional trader, and I've been speaking a lot with him, and he's been sharing a lot of his insights into one of the systems that he has been trading historically. And there is a lot of emphasis on confirmation. And so my desire to implement confirmation into the robot and the histogram was enhanced when I spoke to Wassa. I won't say what his real name is, just in case he wants to remain anonymous. But his insights have been very, very helpful. And so I want to thank all of you for your help, and I want to thank everyone in the room who's really pushing and contributing. And special thanks to Cameron and to Ryan for putting so much effort into analyzing all the data. I mean, Cameron has put in so much work. I don't think you guys know how much work Cameron has put in. He has, I mean, hundreds of instances of the robots running in all sorts of different configurations, just creating data, thousands and thousands and thousands of trades, which is beautiful because then we can analyze his data and we can pinpoint similarities in the winning trades and similarities in the losing trades. And so we can find a configuration that closes or reduces the number of losing trades and enables us to hold the winning trades perhaps a little bit longer. And so it's very exciting indeed. But I want to thank everyone once again for watching, and thanks for watching this video.